Is now better? I'm not sure why this automatically changed. That's strange. Okay, perfect. So I just have no idea where I finished when it stopped. Okay, so anyway, what we are expecting, Powell will probably be dovish today, tomorrow, or they will not bring anything new to the table. So still, either markets will stay where they are, or possibly even they will move higher if Powell will convince speculators and traders that they are really going to cut rates later this year. So looking here at the 10-year US notes, I really think that more upside is in the cards. Maybe there will be just only short-term third leg to the upside if there will be something more complex here, but still I'm expecting this third leg to the upside. And normally when we are expecting third leg, you would see that price will move towards the FIP equality level compared to the first leg, which comes in around 112. That's also the swing high here of a wave X going back to March highs. So I still think that this is a pretty nice valid target, and of course this means that the dollar can potentially see even more weakness. Of course, a lot of will depend also on the US inflation data. I think it's released Wednesday or possibly on Thursday. So I think that this inflation data, obviously it will depend what Powell we said, but if data on Thursday in the US will confirm that what Powell is going to say, then of course this will most likely keep these trends alive. So I still think that dollar is headed to the downside, but we are not breaking out yet. Okay, that's something that we also consider. It's totally different between what we think or what is happening. Okay, because if I just delete all of the arrows here and labels, you will actually see just flat sideways price action for the last few months. And actually we are in the summer, so don't get too excited about potential breakdowns. Even if we are here in a triangle, okay, we still can be only in a wave D headed towards the lower side of this range. Okay, so there is still some room for weakness here, but doesn't mean that this weakness will be just very strong and impulsive that will continue straight to the downside. I still think that more weakness will possibly be seen, but we'll have to wait till maybe September, October, or November when finally things may start to moving much more aggressively. Also, let's not forget on this wave count, which by the way is also showing a triangle because the price is sideways, and I don't want to be too smart projecting the next moves. If suddenly, let's say, this trend line support from December lows will hold and you see, let's say in the next 2 weeks, break above 106.30, then we can easily move through the summer towards 108, and then still later this year I would be expecting a reversal to the downside. Okay, so dollar is sideways, but overall, based on how stocks are performing, how US yields are looking, and notes, treasuries, of course I'm expecting that sooner or later dollar will also will came to the downside. But why we are leaning more towards bearish case, maybe in the short term, is also because we came out of this wedge, and this looks like a intraday, could be an ongoing intraday impulse here away from the 78.6%. So this, in my opinion, at least short term, could bring more downside here. And what I really think that this can be the case is because if you look at the US yields, this looks like a bearish impulse as well here down from July highs. So after this consolidation, I think that more damage can be seen. We are also breaking some nice trendline support here, so yields definitely are not looking good here and could be headed towards much lower prices. Now looking at the euro, well, euro dollar did not move much during based on this results on French elections. It was more up because of a dollar weak story. So here looking at euro dollar, I think that there can be more upside, very nice, very strong rise here, but we are at some resistance at 108.50. I also posted on Twitter today, I posted some and labeled some potential very strong support around 108, because we are now in this intraday range till Powell testimony begins. I think that this market will not break out, but keep in mind the testimony will start, if I'm not mistaken, in 45 minutes. Okay, so US session can be quite interesting, volatile, at least in the first 2 hours, and then let's see where we close. But overall, I just think that this market looks in a very good shape here. After pullback, I would be expecting more strength here on the euro. Now looking at cable, well, cable is maybe firstly here is testing this very important trend line connected from July highs, okay, of 2023, by the way. So it's a 1 year old trend line. We are trying to break it out here, and I've been talking about this potential breakout because in this direction, because you have impulse here from October of 2022 lows on a higher degree scale, then a smaller impulse up from September lows, and again this has been an impulse up from April of this year lows. Okay, so we have higher swing lows, and from each higher swing low we have a new impulse, and you want to look and expect market to move or break in the direction of impulse. Okay, because each retracement against the impulse is corrective, especially if the beginning point of the impulse is not breached, which in our case was firstly here at 1.2, and then 1.2290 or so. So as long as we are above this level, we are expecting higher prices. Even an alternate wave count shows potential bullish scenario as a triangle. Maybe this wave is already finished here. Okay, so no matter how I look at it, I think that cable can see more upside. Firstly, I thought that we'll see here a slightly deeper pullback. I was ready to look for potential longs around 125.50. Unfortunately, market never got to this area, and we are just moving sharply to the upside. So maybe this bottom has already formed, and if you're looking for some short-term trades on the long side here, pay attention to support around 127.50. It was a small fourth wave consolidation here. You have also this support as well, okay, at 127.38, and then you have invalidation level, the real one, at 126.70. because if you think that we are in a new impulsive phase here that should take us higher, then of course wave 4 should not drop below that level here. Okay, so I think that pound itself is looking quite good, even against euro is looking very good. I mean, I think that I covered euro pound last time, and we said that we see ongoing wave C. Wave C is a motive wave, meaning it should be structured by 5 subwaves, right? And what you see right now is just another pullback within this weakness. Okay, so until we see these 5 waves down from that high, I think that this trend can stay here in play for another low. Also, I like the idea that we recently came to the upside. We filled this gap that goes back to mid of June at the same levels which were the previous lows. Okay, so that was the perfect resistance area. So whenever you see the gaps open, just keep in mind that gaps can be filled. And if you think that higher degree trend is still in the cards, well, these gaps can be perfect for potential new swings on the markets. Okay, so I'm expecting a little bit of more weakness here, not a little bit, maybe that's a lot, and then we will see potential price stabilization, maybe even here after retesting these 2022 lows. Okay, if I'm wrong, well, then price should definitely rally above 85.30 or so to say that we are already turning or bottoming here. Okay, but for now it looks like pound has definitely more strength here. As I said, cable is looking and showing this direction, euro pound as well. Now let's take a look on Aussie. So again, if you were with us last time, you know what we have been talking about a lot for the last, actually for whole June, we've been highlighting bullish breakouts on Aussie. Okay, as you know, we have been tracking this kind of a triangle, and triangle is an ongoing consolidation. And normally those who are not familiar with the Elliott wave principle, they will be trapped within this range. Okay, they will try firstly to buy the market, then short the market, and because market will just keep moving sideways for a very long time, they sooner or later they will give up. Okay, and once they will give up and realize, okay, this is a range, I will not look at this market, well, that's exactly when the market will break out, especially if you have some kind of a catalyst here. So I think that so far we have a very nice breakout, but keep in mind that those who firstly were trapped in this triangle that wanted to trade Aussie, and now they want again to join the trend. And what happens, unfortunately, they are very late to this trend. They could be some extensions out of a triangle, but it's worth to keep in mind that moves out of a triangle are final in a sequence. Okay, so it means that sooner or later we can be moving into some resistance. I'm not saying that this is here, I'm just saying that whoever wants to ride this trend or join the trend here, keep in mind that you should adjust your risk, because we can be in a very late stages, especially if we see another lag to the upside here in the short term, because then you will have from ending point of this triangle, which was wave E here at 66.20, you will have 5 waves up. So maybe in the short term there can be a little bit of more upside. Also, what I'm looking at, usually when moving out of a triangle, I will use this triangle measurement tool. Okay, so I will take the distance of the longest leg within a triangle, then project it from firstly from end of a wave E, which is end of a triangle, and then also from a breakout point, which should be either at a break of the trend line, or even better if you measure it from end of a wave D swing high, because whenever you have ABCDE legs in place and you think that market will break out, well, this wave D swing high is the most important to make sure that we are really moving out of the contracting range here. So here, of course, 6800 and 6830 maybe are the upside, the ideal upside projections here. But whenever we will start pushing to new highs here, you will be in a fifth wave, and that's when we would expect that sooner or later market will step into new correction here. Also looking at Kiwi, as you know, we've been tracking bullish patterns here as well. Some very nice, even clearer compared to Aussie. We had 5 waves up here, okay, from that April lows, and then a counter trend price action somehow overlapping. Can be still, maybe if I force the wave counts a little bit, could be still leading diagonal for wave A, meaning that you will see a deeper correction and then a bounce still from this 600 area, or maybe we already bottomed here with an ABC formation. But what I really like is that we have on Wednesday, actually our time that's still today, Central European time, I think it's around 10 o'clock. So we have New Zealand rate decision. No change are expected. Okay, but they said that in the last time, they said that they need to maintain policy at restrictive levels, okay, to ensure that inflation returns to target. So I'm sure that they don't want to be too quick raising rates. They're also watching probably inflation globally, obviously, and in Australia, which is very close to them, as you know, is in Australia, latest figures showed hot inflation. So I really doubt that they will turn dovish here, and probably they will stick to current interest rates, or potentially even hint that if it's needed, they will hike. So based on this, I mean, it looks like from Elliott wave perspective also very nice here. I think that more upside could be seen here for a push into wave 3, maybe even just wave C, and you will see wave B rally here, and you will see this next drop still a little bit deeper. But even if we see a temporary recovery, there is room for more upside, because each corrective lag, even if that's a correction, should be made by 3 waves, not within 5 waves. But this small rise here is impulsive, not corrective. So I want to look in the direction while the market holds this low. Let's take a look on crude oil. So crude oil, as you know, everyone started turning bullish on crude oil. I also posted on Twitter just chart without labels. I've said where market expect that this crude oil will move. Of course, some are now calling $90 per barrel, $100 per barrel. Down here, they will start calling 60 or even lower. So, but if you zoom out a little bit, we are actually still in the range, okay? So, of course, we can still see $100 before topping out, but overall, I just think that we have to respect this kind of a trend line, okay? We also at the 61.8% of wave C measured from end of a wave D, not of wave, it's not measured from end of a wave D, okay? I mean from the whole structure. So you took the distance of wave C and projected from the termination point of a wave D, and where you see the 61.8%, that's the resistance area. So far, we are respecting this. Market respects this very nicely at this trend line, and we are already coming down a bit. So I think that we could be even trading towards the lower side of the range. And why I think that this could be the case, because I even have the bullish wave count here, which shows that what if that's a triangle in a wave B here, right? Then wave E is still missing, and even this wave E should take us to the lower side of this range. So I really think that this market could be maybe just chopping around here. It would be obviously very good for inflation to bring it down if crude oil will come lower as well. But overall, I still think that later this year crude oil will be closer to 60 rather than, or even 50 rather than back towards $130. Okay. At the same time, if you look at crude oil, as long we are holding this trend line, and I have some very short-term view, at least short-term view, for a deeper pullbacks here, then of course watch maybe NOK, watch Mexican peso. I think that earlier, 2 hours back, we got to the release of Mexican, I think inflation in Mexico came a bit higher. Let me know in chat room if I'm here, either you're watching this on YouTube, Twitter, then post a reply, or on Facebook. Please let me know if you're looking at any, if you have any data for inflation in Mexico. I think it ticked a bit higher. So this obviously means that dollar Mexican peso can come a bit lower, which makes sense, especially if crude oil would also actually if crude oil will stay in uptrend here. Yeah, exactly. But Mexican peso is also more correlated to stocks as well, not only to crude oil. Now let's take a look on gold. As you know, last time we talked about gold. I presented you 2 views, and both were pointing towards let me check, towards this trend line at 2,350. So we were looking at short-term bullish view because the rise from that low was impulsive on a smaller time frame. Okay, but I will not go into details. If you want to check this webinar from last Monday, you should do so. You will maybe get some new knowledge as well, how I look at the wave patterns and potential trade plans. So we were looking and tracking 2 wave counts back then, bearish triangle in wave B for a deeper correction, or a bullish triangle. But since we are seeing a very nice push to the upside, what we are seeing now is some evidences that is pointing towards a triangle that should sooner or later send these prices higher. So we either completed this ABCDE structure here at 2,300, and we are now breaking higher. We even touched these highs here back from start of June, but did not really break out here. We are now pulling back. So possibly we are now in a wave 2 correction. So in such case, I would watch for supports at 2,320 to 2,340 area. So that would be ideal support. Even if I consider this alternate count, okay, that you are still now in wave D and you will see a wave E pullback. Again, this will be the potential first support to watch. So again, I think that that's a pretty nice looking wave structure so far, because notice that in each leg we have some overlapping price action, and clearly this looks corrective lags. So I think that there can be a much more upside on gold, but as I said, maybe after a pullback. So now if you're looking or considering potential long setups on metals, maybe watch out for silver as well. I mean, gold silver ratio here is trying to break to the downside, so maybe silver is now finally going to wake up. So maybe if this current trends from last week will resume, okay, especially after Powell testimony and US inflation data this week, then of course prices will be much higher. But then over the next few weeks, what you will see that again, everyone will get very bullish on metals. But as soon as we will start breaking to new highs here, towards maybe 2,500, maybe even 35 on silver, that's when we have to make a step back and realize that maybe we are very late to this current trend. Okay, you don't want to get caught in this mania phase if we suddenly see some very strong bullish moves here. Regarding my invalidation levels, to turn bearish on gold or say that we are topping out, I really would have to see the lower trendline support of this base channel broken, which is, I mean, 2,200. If we start breaking this level, especially on the weekly close prices, then obviously I would realize that maybe something else is going on. But for now, there's still a very healthy recovery, and you can see that I have a basic chart here as well. I think that we are positioned here in this wave 4. Now let's take a look on on DAX. So through summer, I said that maybe stocks will consolidate a bit. We are still seeing some stocks, especially US indexes, pushing to the upside. DAX not really following, and I think that maybe DAX could stay in this corrective price action for a while. We can either be here for looking for a deeper wave 4, or we will just stay sideways. Maybe that's a triangle, a running one within the bullish trend. But even this wave E, I think, still should see a bit of more weakness towards the lower side of the range. So I think the German DAX still later this year could potentially see a new push to the upside, maybe already after summer, but for now it's a bit too early. I still think that as long we are trading, especially below, if I maybe adjust this trend line a little bit, as long we are trading below this trend line, we are just moving to the right rather than to the upside. Looking at the S&P 500, as you can see here, the story is a bit different. We are in wave 5 of this extended wave 3. Usually, if you have your Elliott wave book, you will know that sometimes 161.8% are very important, especially when it comes to extensions of the previous higher degree corrections. So this is the pretty strong first resistance area that we should watch for, but it doesn't mean that we will turn bearish from here. Okay, we just have to be aware of pullbacks. Okay, and whenever these pullbacks occurs, that's when we should look for potential re-entries and join this trend. So for now, the trend is still up, no doubt, but during summer, during this period, maybe just it's better to step aside, wait, and let's see if we get new opportunities in a few months from now. Okay, now if we also take a look on some of the single stocks before we go covering cryptos, as you know, last time we've been talking about Tesla. We said $220, $240 could be next upside targets, and so far that's still very strong, but we are seeing prices moving into this very strong resistance now, 260 up to 280. Okay, so if we are in a wave 4 triangle here, higher degree, then wave D is now at the resistance. So just be aware that maybe there will not be just straight move or break to the upside from current levels. Also, if you look at maybe at nvidia, where it is, here it is. Here again, I said that potentially we already touched some very important resistance levels. I know the trend is still bullish, and there is still very probably a lot of speculators who want to ride this uptrend here on nvidia, but the Elliott wave pattern shows that we should be very careful and cautious up here. We have 5 waves up from these April lows, and then what's most important is that we had some very sharp drop here in June. Okay, so I think that after this current rally, we maybe are going to see another dip. So if you want to look for potential opportunities again here in uptrend on Nvidia, I always suggest to wait on a free wave retracement. Never buy the first dip, because after first dip there will be a lot of hype, that will a lot of interest for potential longs here. But of course the sentiment is completely different when you have 3 legs from the highs. Okay, because down here some will realize, okay, we have a top, and of course you want to be on the opposite side of this sentiment, okay, because you want to be early in the potential changes of the cycles. So I still think that Nvidia longer term, of course, we may continue much higher, but short term I just think that you should be aware of this ABC structure. Also, if you look at MD, this one has played out quite nicely since last time. As you know, we said that despite very sharp drop here from March highs, which by the way can be even bearish impulse, meaning you have to be aware of a significant top up there. So despite this drop, we said that even this very strong downtrend should be reversed by minimum 3 waves. So we spotted this recovery, okay, this reversal, which so far is still in play and could even continue higher into this wave C, maybe even wave 3, who knows. Okay, but what was the key for this analysis to play out is that this rise from that low unfolded in 5 waves. So we knew that back then that this is most likely part of the higher degree structure or recovery that is not finished just yet. So we are now tracking this wave C, which if market will stay in this uptrend, yes, wave 2 was above this starting point of wave 1, then of course before this market may potentially hit resistance, you should see 5 subwaves up within wave C. So I think that there can be room even back towards these levels here. Okay, let's take a look now on Bitcoin. So Bitcoin, as you know, exchange inflows, we talked about it. I shared occasionally some charts, some data also on Twitter, and we had some inflows here back in this was 1-2 days back. Okay, so obviously there are some traders very concerned about Bitcoin because, as you know, German government sold plenty of Bitcoin, so this spread a lot of fear, and obviously some traders, some investors who are holding Bitcoin for a longer period of time, keep in mind that there was a very nice move so far to the upside. Even those want to make some profit from that move, okay? And some were very late, especially after this Ethereum ETF launch announcement. Some were very late to this game, and they are going to be liquidated now. So I'm afraid that maybe in the near term, this price action could be a bit tricky, maybe challenging. Maybe we see another retest of the lows, but overall I still think that that's a very nice and good deeper correction here on Bitcoin and other cryptocurrencies during summer. Also, if you look at liquidations heat map, no, I have to look at 3 month, just a second. No, let's take a look on 6 month. So very big and important level, in my opinion, okay, is here around 50,000. You can see that these are much more greener, or even some yellow colors represents a lot of stop orders. Okay, so a lot of liquidations may happen down here around 50,000. Keep in mind that around 50,000, well, that's not enough data to show on this chart, but keep in mind that around 50,000, well, back in January, that was the level of the ETF announcement for Bitcoin. Okay, back on January, what, 11, 15 or so. So it looks like that this could be a perfect support if Bitcoin will erase all of those gains since January. Okay, so I think that's a pretty nice, interesting level for potential new turn to the upside. Now, as I said earlier, while I think that this is just a summer consolidation, part of a summer consolidation is because We normally experience some very strong and sharp moves during September, October, of November, and this goes perfectly with what I'm expecting also later this year on stocks and the dollar. Okay, so I think that if stocks will keep moving to the upside, of course, sooner or later even cryptocurrencies may stabilize, especially if the dollar will come lower as well. So for now, we can be approaching some very interesting supports. As I said, ideal support is going to be around 50,000. So I still think that's a wave 4, but if you're more like a short-term trader, can be a bit tough situation maybe for you to pick a bottom here, because if you look at maybe on these smaller time frames, okay, that's not really it's not really showing us very strong conviction that the market is turning bullish. Okay, we are just moving sideways here. It will be totally different story if we start rallying back above 60,000 or so. Then we could be even in wave 3, and that's when you could be looking to buy some pullbacks here. If you're more like a longer term investor, then of course, if you maybe you will be even more happier if you'll see 50,000, because you will be able to buy this one cheaper. Also, if you look at the Ethereum, we have some very nice bounce here away from that support that go back to February. But if we consider that we have only 3 waves from the lows, well, I just realized that maybe much better support is still a bit lower, around 2,600. To turn bullish here and say that we are bottoming, completing wave 4, I want to see 3,300 and stable prices above that level. It doesn't mean that just 1-2 hours of a bullish price action is enough. No, cryptocurrencies are a bit different compared to other markets. You want more conviction, more confidence that this is really bottoming. So for whenever you want to call breakouts on cryptocurrencies, I suggest don't wait just 1 day, maybe wait 1 to 3 days instead, and then you will see stable price action above your levels. That's when you may maybe say, okay, it was not just an intraday spike hype impacted by the by news media, tweets, whatever. It's the real deal, meaning that market has real flows behind it that could drive these prices out of the range whenever you are expecting a breakout. Okay. Also, when it comes to Bitcoin, maybe look at the ETFs as well. Here we have some very nice clear wave structure. I mean, wave 1, wave 2, wave 3, very nice pullback here for a wave 4 in my opinion. So of course, a lot of traders will investors are driving these markets by fear, and they will try to liquidate, and more liquidations will happen, easier for market will be to continue higher. Unfortunately, that's how it works. So here, if you are familiar with the Elliott wave principle, I'm sure that you will see this as a wave 4 and expecting a final another push to the upside still maybe this year. In fact, we also, if we check our website, we also prepared this article as well here for this Bitcoin ETF and where we are currently positioned. If you are not familiar with the Elliott wave principle, this will definitely help you. Okay, traders, thank you very much for your attention. I hope that you enjoyed this webinar, this presentation. Make sure to press a like, give us a comment below this webinar if you're watching this recording later, share with your friends, make sure to put your notifications on, and I will maybe try to release some new free material through the week and give you some updates, especially if Powell and US inflation data will move the markets. Traders, have a good one and talk to you soon. Bye.